Welcome everybody to another episode of Home Buyer Academy Live. I'm host number one, Maurice.
And I'm your
And
boy Chad Murray. How's everything going, Maurice?
I'm going. I'm so used to calling you Mo, so same Maurice now. But so
What? You just calling me what?
I'm so used to you calling me Mo. So when you said Maurice, that was like
Threw you off
weird.
a little bit.
No,
Yeah,
but
got to keep
yeah,
you
I
on
was
your
off.
toes, brother.
But I'm doing good, man. I just flew back in from Virginia. We celebrated my dad's 70th, so I had a great time with the family. I literally landed a few hours ago back here, but we had to keep the live going, so I didn't hesitate to get back in front of the camera for my people. How about you?
Well, man, first and foremost, big up to Papa Jones, the grill
Hmm.
master. You know
Oh
what I
yeah,
mean?
it
He
was
taught
great.
me how to
Hey,
get.
we grilled out for sure.
Yeah,
Yeah,
yeah. Nah, I know when Papa Jones is on the grill, he was coaching me, so that's
hmm,
my guy. So happy birthday to him, man. And I'm glad you had a nice, rejuvenating weekend. Mine, not so much.
bye. Oh,
No, I'm just
yeah. Well, cause you was busy this weekend, right?
Yeah, man, we were
What,
quite busy, brother. We were quite busy and
what,
blessed.
what,
Busy
what,
and blessed.
what we had going on this weekend?
Well, how about we jump into like the overall vision of what's going on, bro? Because this weekend on Saturday we had a home buyer workshop at the River of Life Church. So first and foremost, I want to really thank the River of Life Church for bringing us in to do Home Buyer Academy Live. It was a phenomenal event, and we did a great home buyer workshop that really impacted the participants, man. And we brought some great speakers in that
That's
were
awesome.
able to hone in on the specific questions. And it was crazy because it was like every topic that we discussed was right on time for people in the audience,
Hmm.
right? I had Tanya Hayes come through, talk about specific title challenges or title things that you want to be conscious of when you're going to buy your house. And there were people that had scenarios that she was able to work with them through right then and there. And that's what we love about our workshops, right, Mo?
Yeah,
Because
I love that.
yeah, like we're not about doing workshops that are just the fluff and oh, this is the process. We're able to actually coach and work through the workshops, which is what makes us really powerful, and has been so. That's why people keep on bringing us back in, and that's why we've been able to get the results from, future home buyers, man. So it was it was great. So that was the biggest thing in the weekend. But yeah, then Saturday,
Yeah,
Sunday, I got to relax with the fams.
that's good. No,
Yeah,
the only
man.
thing I was gonna say was I would love to have as we get more people to come out to the workshops, have them come on live with us one of these Tuesdays. That's
Yeah,
that's
no
all I was
doubt.
gonna add. But
Yeah, no doubt,
how's
no doubt.
Sunday?
Oh yeah, no, it was great. We know just relaxed and all of that. But
That's
yeah,
good.
definitely, man. Wanted to kick it back to you so we could really
Yeah,
our
yeah.
get
So let's,
our
as we
focus
always
on.
do, hone in. It's been a crazy week. I know I'm a little bit tired from jet lag, as they call it. So we got to get redirected and refocused to the topic at hand. We want to give you guys 100% of ourselves every single episode. So right now, if you're watching with us, whether it's on Instagram, YouTube, Facebook, hit that like button, hit that subscribe button. But let's get focused for the right now. Let's forget about the day. We're going to take a couple minutes here, a couple seconds here just to sit in the moment. Just allow God to just navigate you back to being present. You might have had a busy day. You might have had a lot going on today. If you weren't traveling like me, you might have had a busy day at work. So, whatever it is, we're just going to take a quick moment to breathe and pause. Just come focused to right now. Don't worry about work. Don't worry about those tariffs or Trump or whatever is going on. Bring it into right now, right here, because this is where it's going to be important for you to get what you need. All right. And tonight's topic is going to be a very important topic, one of the key bases in the whole entirety of the home buying process. Financial literacy altogether. We're going to talk about credit, right?
Oh yeah, no doubt.
Oh,
I was just kind of, I was just trying to, I
you
was
reset.
trying
You
to
still?
agree
Oh, you
with
were
you.
still coming
'Cause I
down.
thought we was getting ready. I didn't know if we was gonna do gratitude. I didn't know if we was gonna breathe. I was just
No, no, no,
waiting.
no. Oh, yeah, 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 yeah. So,
But we're
because
present though.
credit can be stressful.
Yeah,
Let's piggyback to the gratitude, right? Let's come down
yeah.
like the astronauts did over the weekend.
You all over the place, man. You an astronaut right now. Definitely
No,
an
you ain't hear
astronaut.
about the women that went up into space and came down like in 10 minutes. Katy Perry and all that. Come on, man. You gotta
For
be up
real,
to date
Katie.
with
Oh,
current
oh, it's
events.
like
Yeah,
6 women.
yeah.
Man, this man said get present to the moment, but let's go to the space real quick. Yo, show you.
All right, all right. So yeah, let's hone in. I do like to. I'm grateful for laughing. I'm grateful for being in a space where we can just laugh at life. I'm grateful for my father, yo. My father is 70 years old, 70 years of greatness, of wisdom. Just hanging out with him this weekend and seeing all the family and friends that show love and support uh, to the great man that we all know who he is, and just being around, my family is awesome. But I'm so grateful for my father, man. I can't express how grateful I am for that man.
That's
I'm
what's up,
truly
man. That's
grateful.
a beautiful thing.
Shout out to my mom
Um,
too, cause I know you're probably watching, but it's Dad's weekend, so I gotta give him his flowers.
Yeah. All right. So I'm grateful for the work that we do. And I think this weekend really highlighted it to see the breakthrough of so many people. It was really inspiring. And just look out for my Facebooks, Instagram. There are going to be a lot of clips coming forward, a lot of jewels that we dropped at the workshop that you'll be able to capture right here on our socials. So keep a lookout for it. And like Mo said, like, comment, subscribe, but get active too. What we want to do, we want to jump right in. And what we want to talk about today is credit, right? Because the thing about credit is that it's seen as the biggest impediment to this process. And yeah, it is technically, but in all reality, it's the easiest dilemma to overcome because it's just it is what it is. You have full and total control over your credit in the sense that once you're intentional about where you are, you can focus on going where you want to be.
Hmm.
And one of the biggest things that came up and always comes up when we talk about credit is utilization. Now, we know that credit has five main factors: that's payment history, utilization, length of credit, new credit, and also credit mix. I only focus on the top three because the top three, you could dig, those really have 80% of the puzzle. When we look at utilization, however, that's where you could see the most radical results. Now, of course, you got to make your payments on time because if you're missing payments, you're going to see radical results, but radical in the wrong way. So, what we're looking at is what you can do to really be intentional about working towards that credit goal. And what we spoke about in detail, of course, was the debt snowball system. And functionally, that's a process in which you could actually eliminate the amount of credit that you owe by being strategic on how you pay down debt. And the reason why we like to go after this particular strategy is it because oftentimes people, when they look at having all of this credit card debt, what's the first thing they try to do? All right, I'm going to send $50 more here. I'm going to send $10 more here, $13 more here. And by the time you really look at it, you've scattered out all of your blessings that there's no concentration of success in that process. What we want to do instead is really focus on eliminating one small credit item as a time. In doing that, you will build momentum. You'll have more money to put towards your credit as you pay off other debt. So, for example, if you have a credit card that you're paying $50 a month to, but you increase that payment to $100 a month, once you actually pay off that debt, now we have that $100 a month that's being rolled over to the second smallest debt. And as the payments keep on getting paid off or the balances get paid off, you roll them into the other items, right? So that's something that is a matter of mindset as much as anything. Being willing to concentrate and put your credit and the goal that's behind it, which is home ownership, at the forefront of your financial decisions. So that means that when you want to make a purchase for clothes, for example, you're going to make the more responsible and economical choice because that luxury is going to come at the expense of your security. right?
Right.
That bling is going to come at the expense of your legacy. And ultimately, all we really want to do is get you into home ownership so that you could build roots and build a foundation that others could be blessed from in the future.
Right.
So, inside of the idea of credit, utilization is the biggest area that we want to focus on to help you to see the drastic boost that's gonna make the big difference, right? Now, but Mo, let me ask you a question.
Yeah.
As a budgeting man, with your career at Wells Fargo, being a personal banker, what do you think is the mindset difference between people who have successfully navigated the money game to those who don't necessarily have the same success? What would you say is the difference in mindset?
I'll say discipline. So
Mhm.
I'm a big fan of writing it down. Writing things down changes your life. Like literally getting a piece of paper and writing out your goals makes the difference. When you write out your budget, you can see the numbers, and it's at the front of your mind to organize it. Right, like for example, you know, doing a to do list. Right, when you write out the to do list, you check one off, check one off, check one off. The same thing with your budget. Okay, I got mortgage on the third. I do grocery shopping on Tuesdays. I got these bills on the seventh and eighth. So when you do that, you can manage it better. People that don't do that tend to struggle the most. People that take it seriously always do better because they know how to manage their money, and then they're more motivated to make more money because they feel confident in their management of the money. Because you always hear the stories about people who increase in wealth, but if they don't break their bad habits, they continue to have bad credit, and but then they get more credit and it's worse. And they earn more money, but they have less savings. So it's like it doesn't change because they're not setting the goals. I'm a big advocate of budgeting. Before you do, if you want to make any financial change in your life, you have to get out a piece of paper, write out your monthly expenses, your monthly income, track it for a month, 2 to 3 months before you do anything else. If you already have credit, this will help you see where your money's at. 'Cause like what Chad was talking about, that 50 here, 10 here, the debt snowballing effect. Instead of you trying to see, hey, boss, can I get a raise on my job? The money's probably there. So the mindset behind it is I want a better credit score. I need to discipline myself. I need to see what it is, right? Like you don't know how much weight you need to lose until you step on the scale. You don't know how much money you need to save until you write it all out.
That's dope, bro. You don't know how much weight you want to lose until you step on the scale. That's so simple, but so real. And when we talk about the credit scale, that starts with getting your credit report,
Exactly.
right? So once you get your credit report, you get to see the damage. And really and truly, man, a lot of this credit game is psychological because people don't face it because there's a measure of fear or scarcity around it. Like you just
Hmm.
know that you're bad credit. So
Right.
people oftentimes just totally avoid it. But I want to encourage you because once you rip the band-aid off, that's when the healing begins. And in this case, once you actually get started by just taking a look at where your credit is, keep
Hmm.
in mind our target isn't an 800 credit score for success,
Right.
right? Our target is so manageable. Our target is to shoot for 640 to 660.
Hmm.
No, I'm sorry, 620 to 640. I'm sorry.
Yeah.
And the
60.
reason why I say 620 is because that's the bare minimum point at which a majority of the down payment assistance programs are allowing you to get those down payment assistance funds. Others ask for a higher score like a 640. That's also the point 620 when you can start qualifying for conventional mortgages, which just gives you a broader range of financing options. So just being able to tap into that is going to be a real game changer, especially in a market like now. I speak
Hmm.
about it all the time, guys. We're in a buyer's market, which means that you are the one that is the belle of the ball. So for every few houses, you're the one that's going to be able to have their choice. So understand your position in the process right now. That means getting down payment assistance, which was an impossibility just 2 years ago. Because If you came to a seller and said, "Hey, I need down payment assistance," they're like, "Next, who's gonna give me 10,000 over asking 20,000?" Now we're in a time where your one yourself as a one buyer is so valuable because every block has a few for sale signs popping up. Take advantage of it by being ready to go. Take advantage of it by getting prepared. And one thing I want to mention, Mo, and if we could put this up, Hometown Heroes is coming back to Florida, guys.
Okay.
Hometown Heroes is a 5% down payment assistance program from the state of Florida. As long as you work for a business or own a business based out of Florida, that means that you could have an office here. That means that you could do a majority of your business here. That if the business is based out of Florida, you could get up to 5%. Now, there are certain limitations in terms of income. If you can make too much money for the program, but for the most part, we're talking about buyers being able to qualify for 5% towards their closing. And this isn't money that you're going to have to pay back monthly. You have to pay it back once you actually either refinance or sell your house. But listen, that means that you're getting into the house at 0% interest on that down payment money. This is a game changer, and there's a lot of money that's going to be available. So, and it's a sprint. It is a sprint. Once this money hits on July 1st, people are going to be lining up because it's only 100 million to 200 million that's been set aside for the down payment assistance. Now that's still a decent amount of money, but get your piece of the pie. It's like, you remember those flowers during COVID? You remember the flowers, Mo, where you got to put your money in, and then a couple people got to put their
Oh,
money in behind you. Oh, you got to
yeah,
catch the flower early,
the
fam.
blessing loom thing. Yeah,
The
I remember those.
blessing loom, fam. I lost every single time. I always came in too late, bro. I lost. But that's the
Uh,
thing. This is like that in the sense that you have to get in early. Now it's fully not a scam. You'll
yeah, it's
get
not.
your money, but you got to get in early. And if you do get in early, you won't be like those people at the end of the flower that
They
like
ain't get they cut.
ain't get they cut and it's just withering away like a old rose petal.
Mm.
You know what I'm
So
saying?
this is so I was saying with the site here, we went over it last week, but we're definitely going through it again. If you guys can see, this is the actual website, homesforheroes.com, where it talks about hometown
No, that's
heroes, right?
actually not the that's
No,
actually
it's
not
not.
the site. That's
No,
that's
that's
it's
one
the
of them.
Florida housing. Yeah, that sponsor is. No, that's not the
No,
right one either.
I thought I saved it too. So I was about to tell y'all to do what I was going to do. Hometown.
Hold on, go down. It's okay. You can scroll down. It's right.
Yeah.
It should be close. Florida Housing Finance Corporation, right there. Florida Housing. Yeah, there you go.
Boom.
Yeah, that's the one. That other website kind of drew my attention too for a second, but nah, this is it
Yeah.
right here. So if you could just talk about like what you see eligibility wise, your screen is super small, but yeah, like I was saying, it's a 640 credit score. We're not talking about a 620. We're talking about a what am I saying? Just a 640. It doesn't have to be a high score. We're not talking about anything in the sevens or the eights. Just a 640 credit score. You could do it. You can do it. And again, that down payment is going to be at 0%, and it goes up to 35,000. So that means that if you're buying like a $700,000 house, you can still use 5%, which would get you 35,000. This is dope.
Yeah.
This is fantastic. And when you couple this with negotiating in a seller's concession, that
Hmm.
means that you could come to the table with very little money out of pocket, maybe 1 or 2%, if not less, depending on who you use to negotiate on your behalf. Get a very strong negotiator. Do not settle for just going with somebody because you have a personal relationship with them. They could be great personally, but not have the experience or wherewithal in real estate. They can't help you. You might love them as a sibling, but if they just started this, you don't want to be their crash test dummy, right? Like you want to work with somebody that's seasoned and knows how to navigate in different markets. But yeah, Mo, you could take that down, please. Sorry.
Yeah. So I was gonna say, didn't you
Oh,
have a store one of your clients from last year, they did the program. and they basically had not. They came to the table with nothing, right?
Yeah, no,
That
not
happened last
not
year.
one client. It's a regular thing. Once you actually do the work to get ready, you'll be straight.
Hmm.
So just take your time and get in there. And what's going to happen is it's really just a matter of the process, right? So credit score, credit score, credit score. Don't think of it in terms of having to be perfect, right? And that's what
Right.
stops a lot of people, perfectionism. You're thinking that you won't be ready to buy a house unless you have a 720 credit score and 20% down. Stop
Hmm.
waiting for that. You could build up your credit while you own a house, and you could save up your money while you own a house. But take advantage of free money that's being given to you. And yes, free money. Free money means 0% that you're paying for that money, which means that any kind of benefit that you get in equity you've earned for free because you got into the game without having to touch your own capital. Big deal. And it's not to be taken for granted. And the good thing about Hometown Heroes in particular, I'm going to talk about a few of the programs and also what the credit requirements are. The great thing about Hometown Heroes is that it doesn't really add any time to your down payment assistance. I'm sorry, to your mortgage process. Other down payment assistance programs like City of Orlando, City of Orange County, Seminole County, all of these other down payment assistance is a whole nother processing process to get through with that money. So it takes a lot longer to close. Not Hometown Heroes. Smooth as butter. So like when you look at borrowing money, Mo, at 0%, like with your background, what kind of option? Where else can you do that?
Not too many options. That's it's like the sales where we call it like the no brainer, right? Where it's
Right.
like the people think it's too good to be true, but when you have it in your hands, you're like, this is actually possible. Because there's so many things like that, like especially with down payment assistance, it's something that you can have in your hand that you can attain. We went through the numbers last week where like the income, the bigger the family, the larger your income gap could be to qualify. So it's almost guaranteed. Like 80, I think we went over the numbers. Like 80% of people in the Central Florida area are in within their bracket range. Like statistically, 80% of them will automatically qualify. You just have to apply and be first.
Yeah, and with Hometown Heroes, it's not even as you can make money. You can make good
Right.
money with Hometown Heroes at that. So yeah, there's
That's
Hometown
another. Yeah.
Heroes, right? There's City of Orlando down payment assistance. There's Orange County. Check in a county near you because they're great professionals that can help you to get into your house all around the state of Florida and the country, right?
Yeah.
But really getting into the mindset that having this credit conversation not be a barrier to your blessing. And if you do have limitations and challenges, feel free to go ahead and schedule a call with us. Schedule a call, go to the website, chadthelender.com. Or, sorry, you could go to our homebuyeracademy.org as well. And you could get information about how you could bring us in to do home buyer workshops. Check out my Facebook, my Instagram, see the work that we've been doing.
Hmm.
Bring that to your community so you can empower your community, right? Like homeowners have 400% more wealth than renters. What side of that equation do you want to be on? And if you're not a homeowner yet, all there is for you is opportunity to be able to start positioning yourself to start gaining long term wealth, starting with one property. One property is not going to make you a millionaire, but one property is going to make you a lot more wealthy than someone who's always renting.
Yeah, and just to break that down, like for a scenario, right? Let's just do two people that are one's renting for 5 years, one's owns a home for 5 years. You're like, okay, Chad, you're just throwing random numbers out there, but I don't get it, right? Let me explain this. You're renting for 5 years, paying 2,000. Let's I think that's like common right now, right? So 2,000 a month, but that money's going nowhere. Yeah, I mean, you have a place to live, but as opposed to owning, that 2,000 is paying down your mortgage over 5 years. Depending on where you're at, depending on how the market is looking, you could have within 5 years an equity of about a 80 to 100,000. And if you're in that 620, 640 credit score, imagine what you could do with that. buy another property. We're big on multifamily homes. Buy another property, invest. So that is an actual real life scenario of how and why people that own tend to be more wealthy than people that rent.
Right. And when you oof, think about it, $2,000 a month for 5 years is $120,000.
Mm,
120,000 now. Granted, if you have that same or a similar payment for 5 years in your house, you won't get back 120,000 worth of equity. You will get 60. You could get 80, depending on the market. You could even get 100. But look, that's a huge swing by just spending that money compared to earning that money. So get yourself in the game, guys, and just take the time to figure out where you are and figure out how we could support and reach out so we could get started on a consultation and help you get to home ownership. And then also bring home buyer education to your community, your family, your children, right? We want to support and serve the whole community, right? So, yeah.
I did, and I wanted to show like the more you tap into resources, you're talking about the change you want to see. I just pulled up some information really quick just to kind of show you the effect of credit and these home buyer workshops that we're doing. The more education we put out, the more it's helping people out. I'm gonna just do a couple quick facts on how being informed has changed the market today. So, for example, as of 2024, most U.S. Home owners have a credit score on average of 758. So these are talking about the people that have owned. So if you most people that are able to qualify, they have learned the discipline to continue to build their credit. So on average in the United States, that's where the credit score is according to FICO 2. Just within the past year, the average consumer credit score has gone from 699 to 715. So on average, as people are being informed and being educated nationwide, on average, according to these numbers here and these are pulled from 2022 to 2024, from what this article is showing, people are improving, and it's very possible for your situation to change because it's happening on a higher average, right? So it's very possible doing classes like this, watching these lives, joining this group, and getting the information that you will have the tools and the resources to improve your credit.
Yeah, that's facts. That's
Mhm.
facts. So, yeah, don't let credit stand in your way. Don't let credit stand
Exactly.
in your way, and take advantage of the equity that you could keep on building. And yeah, so it's down payment assistance season, guys. So, yeah, definitely reach out, schedule your call to get started working on getting home buyer ready. And yeah, we could get you on a pathway that you won't be on the outside for too much longer.
It's a So what were some of the topics that you talked about on Saturday that you would say that people had the most questions about from the home buyer workshop? Because I know you had a bigger crowd this time, and I'm sorry I couldn't be there, but I already mentioned why I was out of town.
Yeah, no.
Um,
So one of the cool things about this crowd is that there were a lot of married couples,
mhm,
right? So one thing that I spoke about to a lot of the married couples is many cases you have one spouse that has better spending habits than the other, and that reflects in the credit. So
mhm,
one thing we ended up coming back to in a few different scenarios was one spouse adding the other spouse as an authorized user to bypass a lot of their credit limitations. We had one case where the husband hadn't used credit in years. So he pretty much had a blank slate. But with his blank slate, his credit score was only about a 580, 590, but nothing was there. His wife, however, has great credit. So she has three or four credit cards. And recommended, based on the credit cards that she spoke to me about,
mhm,
to add him to two of those. So with him being added to two of those credit cards, his score is going to skyrocket. His score is going to be in the sevens because that's actually the cheat code in credit to this day.
mhm,
Uh, Authorized user accounts are a blessing, and it's something that you could use to leverage the success of one family member for another family member without that giving family member being hurt by it. Unlike co-signing for a car or
Right.
co-signing for a credit card. Because once that person drives off the lot with your car, they drive off with your credit and there's nothing you could do about it. But in this way, you get to bless somebody with the credit and not necessarily have any negative coming back. There's no negative to come back
Mm.
unless, of course, you help them to buy a house and then they don't invite you for Thanksgiving. I'd be tight.
Right. Yeah,
I'd
that'd
be
be
tight. And I'm not invited to the housewarming. That's the only thing you have to lose. But then you have bigger character issues for that family member to worry
so.
about.
And just so those that are listening, like myself too, just breaking down the difference with the authorized user. Your suggestion, like put the name on it, but keep maintaining what you're doing. But you don't have to, like, don't give them a car, don't give them anything, but they'll be able to benefit
Yeah,
from ver-
100%.
versus
So
like
it's like you
co-signing
get
where like you both have usage and you're risking, you're rolling the dice with sharing this credit line with somebody.
is vastly different. Or
Okay.
being an authorized user versus being a cosigner are two different worlds. And the challenge is a lot of people want to help their family.
Hmm.
But this, as an authorized user, you're able to give an inheritance while you're still here on the planet. Signing up as a cosigner, yeah, you're helping somebody, but now they have every mechanism to hurt you. Not on purpose, but guess what? Most people that need a cosigner show that they might have some limitations financially or credit or just the way that they actually manage money wise, right? So why tag on to that debt rather than you being in a position to bless them without them being able to hurt you? So that's the real
That's
difference.
good.
And that's something that a few of the couples are going to employ right now because it's a simple, easy fix. Not so much a fix, but it's a stimulant. It stimulates the credit significantly to hopefully get you over that bar of that 620 or 640 based on the program that you're looking to qualify for.
And what would you say? I guess that'd be like a question for myself, but where would somebody want to start saying, "Hey, I'm listening to what you guys are saying. How can I start making these improvements?" I definitely know it's. I guess I answer my own question with it's being it's a mindset shift. Like you have to establish in your mind what your goals are and what you want to aspire to, and probably get your credit report. Get your free credit report at freeannualcreditreport.com. Oh no, annualcreditreport.com. You can get it there for free. And then just contact one of us. See how we can come through that and teach you exactly what's on there and the steps to fix it, clean it up. Anything that you would add to that chat that you could think of.
Yeah, so yeah, like you said, definitely start by getting a copy of your credit report. And I would say a good place to start too is just to start searching on Google, just to play around with the numbers. Like the more you're able to just visualize the house, visualize the process, and take that whole strain and stress out of it. Oftentimes, people start the process when they know that their lease is going to expire or some kind of drastic event is pushing them to do this.
Mm,
Even if that happens and you're not able to buy the house now,
ooh,
get get intentional about setting a time to actually buy and then start going online, looking at the different websites, looking at houses. On those websites, they have mortgage calculators. Learn to use a mortgage calculator to estimate the different numbers. A mortgage calculator would help you to take a look at what the purchase price is minus your down payment. That's going to leave you with the print with the balance. From there, you could use what interest rate is prevalent on the market just by searching online. And then from there, you could just start looking at, okay, a house for 300,000 is going to put me in this range.
mm,
350 is going to put me in this range. 500,000. So it's going to help you to just get a better grasp contextually of what the market is looking for. But don't do it by yourself because there are a lot of details you can miss. So definitely reach out to a real estate professional, a mortgage professional like myself, like Maurice, and we can help you navigate all of that. But yeah, try to start from early and make the process as light as possible.
I do want to run back something that you said that was very powerful to me. That people might have glossed over was don't let your circumstance force you into home ownership. You want to become a homeowner on your own terms. You don't want to
Right.
do it. And one thing that was big for my banking experience was people will try to get credit or like try to get loans and credit cards and things like that to try to fix their situation because they didn't have the money
True.
to do it. That is the absolute worst time
Yeah.
to get a loan, to get a mortgage, to get credit, to do anything is when you don't have it. Apply for a credit card when you want to apply for a credit card, not because you're low on money in the bank account and you want to see if you can get a credit card so you can have some money this week. You want to use wisdom and executing your strategy with credit. So you don't want to put yourself in a hole and then you're going to keep digging yourself in a further hole and a further hole and a further hole. You want to put yourself in that position where you can be the best possible. Because some people do, but when you don't really understand the credit game, and it's literally a
Yeah.
game, it's a numbers game. How you navigate it,
Right.
all those the five there's five what C's of credit, all those play a piece in the game. So when you understand like timing of credit, how much credit, the type of credit, all those different things play into it. So depending on when you're looking to buy a house is effective. The type of house you want, how much it costs, all these things factor into that. So you don't want to mess up your credit trying to fix your credit. So just keep that in mind as you're navigating through that credit journey. But outside of that, is there any other tips or anything you want to leave them with for tonight, Chad?
Well, look, man, I'll just say, if you have student loan debt,
Mm,
really pay attention to what's going on because a lot of changes are happening. So as we get a better grasp of what the new changes are, historically, student loan debts have been some of the easiest to navigate. But with some of the law changes, pay attention, and we're going to actually do a video over the course of the next few weeks talking about
yes.
student loan debt and how the changes are going to impact you. So just look out for that. But yeah, just start early and just be disciplined and consistent, and give yourself grace because you might fall off the horse, get back on, recommit, and keep moving forward because home ownership is worth it. And home ownership isn't going to be just worth it for you, but for generations to come.
And we're all about building generational wealth.
That's it.
Um, and before we go, make sure you guys join our Facebook group. There's information, good, rich information that we're pouring out every single day. Home Buyers Club, 2025 Home Buyers Club. Make sure wherever you're watching, you hit that like button, that subscribe. Definitely hit that share button. We would appreciate
Yep,
it
yep.
if you share this video. It doesn't cost you anything. Hit the share button, put it on your timeline. You want to help your people out? That starts by educating them. Education starts with sharing this video. So we thank you guys for joining us. Any last comments, Mr. Chad Murray, the legend, the myth, the man?
Man, listen, I just want everyone out there to be blessed. And like you said, yeah, home buyer 2025 Home Buyers Club on Facebook is a great place to keep on getting the information. So stay plugged in. You know what I'm saying? Stay locked in, and we'll be back next week with some more videos.
All right, catch you guys.